Hello, everyone, and a very, very warm welcome to all of you. Thank you for making the time to be with us today. My name is Sucharita Kamath, and I lead ANDE's work in Asia. After those two videos, I wouldn't want to say too much more about what we do or why we're putting this convening together. What I will do is thank our lead partners this year across the convening, the National Advisory Board for Impact Investing, and also our anchor partner for this final session of the final day of the South Asia Convening 2025, and Irad, who is representing them as our moderator today here on this session. So with that, Irad, over to you to end the South Asia Convening on a high, actionable, and super informative note.
Thank you. Thank you so much, Sushritadi. Hello, ladies and gentlemen, and entrepreneurs, ecosystem builders, impact investors, and the next generation of impact warriors of South Asia. I welcome you all to our today's session. This is the last session of this year's South Asia Convening of ANDE. And today's session is about what is influencing impact investment. So this year we have been listening, we have been discussing, and all across the world there has been discussion of the funding winter, and that has been looming all across the world. But at the same time, we are also seeing a rise of a new investment model, which is not so new anymore. That is impact investment. GIN, the Global Impact Investing Alliance, they have published a report in 2024 states that since 2010 to 2024, $1.58 trillion has been mobilized as impact investment. So this marks that impact investment is not a niche market anymore. Rather, it is the mainstream investment force that we are seeing today. And for the last century, it was all about technology. But since the arrival of AI, it has taken all the limelight. So it is not so fit anymore to invest funds in different type of technologies. Rather, it is time to invest in different type of intelligent business models, intelligent technology adaptation models. So this is where impact investment comes. And for our session today, we have a very heavyweight experienced people with us. We have Dr. Lam connecting with us from Hong Kong. We have Rahma connecting with us from Pakistan. We have Lena, who is connecting from India, and also we have Atika, who is connecting from Indonesia. I welcome you all, four of you, to our today's panel discussion. So now I would request our panel members to kindly say a few words, introduce themselves, their long work on impact investment in a very brief way. So first, I will request Dr. Lam.
Thank you again for Eric's introductions and the opportunity that I can be here. It's a great pleasure to share with you about the experience and insight in impact investing from Hong Kong perspective. I myself came from a very much diverse background as an engineering by training, but then involved in financial market asset management for the past 25 years as the fund management business for sovereign wealth fund, and also managing family office money. And starting from around 12 years ago, I stepped into the area of impact investing in the sense that building up a social enterprise. And my focus starting from the beginning up till now the focus on the people with disability and ethnic minority, in the sense that we want to build equal opportunity for those who are the disadvantaged group in Hong Kong. At the same time, I also develop the social enterprise movement together with some other partners, and build up the tripartite collaborative model, collaborating with commercial enterprise, social enterprise, and also the NGO. So I also stepped into the area of Asian project for the Aboriginal poverty alleviations in Southeast Asia, including Taiwan and Philippines. And then I was also appointed as a senior advisor to UNDP SDG Impact Fund, and later on they changed name to Innovative Finance. So then I also developed the laboratory for impact financing and transformation for City University of Hong Kong. And I'm also taking the chair of the board members of the Fullness Social Enterprise Associations. For the last 15 years, we have been supporting the government initiative for ethnic minorities, and also the Poverty Alleviation Fund through the collaboration between government and also private sectors. And then I also developed also the support how we can also build the startup for the social entrepreneur in Hong Kong. We have been cultivating over 200 startups. And in terms of additional project that I have been involving, and that is also related to the nature-based infrastructure development for anti-desertification in Inner Mongolia. So in other words, that the reforestation, and also the how we build the community, and how we support the anti-desertification, or what we call land restoration in the desert area. So
thank you. That's so great to know. Great to know, Dr. Lau. I will just have a quick round of introduction from all of our panel members, and then I'll come back to you again.
Sure.
Thank you. Thank you. Next, I would humbly request Atika from Indonesia to give a short intro in 1 minute about herself and her work.
Thank you so much, Arad, and good evening for the distinguished panelists and also the attendees. Thank you for having us. So I'm connecting from Indonesia. So my background is coming from the investment side mostly. I used to work a lot with the early stage companies who are raising their seed or pre-series A round, connecting them with the angel investors, impact funds, and some institutional funds as well. So with the mixed background in corporate finance, capital market, asset management, and then early stage investment, I have supported some climate tech, agriculture, and some impact investment projects as well. So hopefully that experience can enrich this discussion. And on my organization right now, it's Indonesia Impact Alliance. So it's a network of impact investors in Indonesia. So our aim is how to unlock impact capital to Indonesia, especially for the segment of the missing middle. So happy to later discuss with the rest of the panelists. Thank you.
Great, great. So very exciting. Next, I would like to hear from Lina.
Hi, everyone. Thank you, Irad. Thank you, Andy, for bringing together this really amazing panel. And so about, our organization and myself. So I'm the CEO of Global Business Inroads. We are but today operate as a multinational with offices in the EU, UK, and the US. And our mission is really to scale technology access and deployment for the UN SDGs. And what do we mean by that? I mean, today, all of you know that whether it is in clean energy, circular economy, waste management, transport, there are fantastic innovative technologies around the world. And South Asia, whether it is India, Pakistan, or Bangladesh, there is a need for technologies that are innovative. So we don't have to wait to invent and deploy them, but can actually, adopt existing technologies via partnerships. And so we've been facilitating a series of European and US technologies coming into South Asia, including so far, we've worked extensively with India and Sri Lanka, bringing these technologies to different markets. And interestingly, working very closely with investors and project developers in South Asia who are looking for innovative technologies that they would like to adopt and invest in that can address specific gaps of South Asia. And to add to this, we are also supporting Indian startups and SGBs, be it in circular economy or in clean energy, environment, healthcare, to expand their products, innovative products and solutions into global markets. We are taking them into 6 global markets at one time. We've just completed a very interesting program in collaboration with ANDE and IKEA Foundation. So here I'm very happy to join this panel and share our views on what's new. I mean, what's exciting South Asian investors and project developers when it comes to collaborating with international technologies. So we'll share more during the course of this panel. Thank you.
Fantastic, fantastic. So hearing from you, Lena. Last, I would request Rahma to have a quick introduction of herself and their work regarding impact investment.
Thank you so much, Arad, and I hope I'm audible fine. I have to apologize for my throat. I have a little bit of flu, but I hope everyone can understand me. I'm Rahma Labib, and I'm the country director for Accelerate Prosperity, which is one of the lead partners for this conference as well. I specifically represent Pakistan at the moment, but we do operations in Central and South Asia, various countries. In South Asia, for particularly this context, we're operational in Pakistan and Afghanistan at the moment. It's a very tricky location, so I hope we can dive a little bit into those areas as well. And the idea of what we do is we kind of provide end-to-end support for emerging entrepreneurs in these emerging countries where other opportunities do not exist for such entrepreneurs. And by end-to-end, I mean we also do programs where we do support in technical assistance through acceleration, incubation programs, as well as investment and early stage capital for a lot of these businesses. If I talk about regionally, we've gone on to invest now in over 500 companies and supported over 5,000 companies in terms of our programs. And we've had quite a lot of experience in understanding what a good balance between financial returns and social returns can be. And we've tried to structure our investment and our due diligence and our thesis in a way that we're able to capture that impact investing portion as authentically as possible in locations like Pakistan and Afghanistan as well. Because there's a lot of mix up in definitions and things like that, but we'll get into it a little bit later. A little bit about myself. I've been part of the ecosystem in Pakistan for over 10 years now. It's evolved quite a lot while I've been here, looking at it from all angles of support and investment. And I've studied social innovation and entrepreneurship, so have a really theoretical understanding of what some of these businesses in different contexts really require. So happy to contribute here and excited about this discussion.
Nice. That's something. 500 startups in investment. That's really very exciting. And definitely, you pointed out and actually kicked on a very good discussion point of financial and social return for impact investment. How do we measure that? So with that, I would place it in front of Dr. Lam first. These things that people, there are lots of investment happening in the impact investment sphere. Rahmat, she herself has 500 startups under their portfolio company. So these type of investments are happening. So, and the fund managers and the funders, the investor, they're all looking for financial and social return. So, Dr. Lama, my point towards you would be that does that change the way we evaluate the companies? Does this have a massive change for the valuation models that we are looking into? So, how are these valuation models changing, or is it not changing for impact investment? Over to you, Dr. Lam. Yes.
Hi, Eric, and I think this is very important questions regarding the ultimate motive of investors. And I have to decompose it into the level of analysis. I think first of all, if I put the lens on those investors who bear with the responsibility of the listed company, or the fund managers who invest into this listed company. So that obviously they have to follow the implicit rules of the valuation model of the stock market. So in other words, that basically we have to translate into the profitability and also the future growth, and obviously the how the innovation and creativity of the product or service that can safeguard, their evaluation model. I think this is what the mainstream investors would like to look into. But at the same time, obviously, the underlying driving force is coming out of the emergence of non-financial value or the non-financial impact. So in other words, the principle for responsible investing and then corporate social responsibility, and also now the ESG or even the SDG investing paradigms would also drive, the overall valuation into non-financial area. But as I said before, we also need to look into the another sector that is not driven by the capital market, ESG rules, and also the PRI rules, the private equities, and this might look into the area that they might be able to identify the unicorn or some company can give rise to extraordinary growth. So why I mentioned these two kinds of investor, because in Hong Kong or in the global arena, we have a lot of this kind of investors who are driving the overall valuation model. But now obviously we have additional in investment sectors like a family office and also the others philanthropists or even certain religious organization, church. They like to look into more financial impact rather than the financial impact. But from the angle of the majority of the Hong Kong investors, family office, I must say, they will still look into the importance of the financial return, as now is the trend is to overlay the social return and social impact and additional non-financial return into this area. So therefore, in order to comply with the evaluation model. And we also need to articulate clearly what kind of impact and to certain extent how this impact can be measurable, and also how it can also be articulated into certain way of monetization of this kind of social value. So I think this kind of methodology is now evolving into this direction. So I would like to stop here and then let's see if
Yes. Thank you. Thank you so much. That this different type of models and laying the social framework on it, and also you have rightly said that the all the impact that we measure, we must look into that how it's not look into that as just an impact number, but also to look into that how we can monetize impact numbers and data we have found. That's a very interesting point. And with that connection, I would like to ask Lina that this changing method that previously we used to see that we had to mobilize fund and capital across the border, and those had their own regulatory and different frameworks. So we're focusing on global south and impact investment, a changing valuation model, and where on the valuation models we are laying different things like social framework, like technological frameworks. So my point towards you would be that in this changing models, that how are the what are the things that the startup founders and also the fund managers should be mindful of while they are opening up an investment discussion across the table.
Yes, Irad, this is a very critical point that you've mentioned, and also, what Dr. Lam was saying and what we are experiencing right now. So, if you look at the South Asian context, we are talking with investors and also, companies that develop these kind of either circular economy projects or renewable energy projects, and they all look at at the end the bankability. Now that is the truth that we have been noticing. And if you look at, for example, circular economy projects, right, one of the things they're looking is what an innovative technology that doesn't exist already in South Asia. I think that is one driver that we are seeing, because to build their competitive advantage, right? So, on one hand, if you bring something very, very new and interesting, it is about building the competitive advantage of that investor or project developer. So, if this technology, on one hand, there is also a very big focus on climate, and looking at because they also see, like in South Asia, for example, in India we have a very strong net zero roadmap even announced at the policy level, right? So these investors now are actually driving forces saying, find me a technology in a specific area. So for example, let's say it's in circular economy, they are looking for technologies that can create value added products at the end. So if you are recycling waste and this technology is processing it in a very different way with an IP. Now the other important thing is that these investors are very clear that they want a very innovative technology with an IP, and already having had some deployments in their local market, whether it's in Europe or the US, it should have already they have run a pilot, and then they want to get this technology, and they also need to test the waste material that is generated in, say, in India. So we've exported waste material from India to France to have it tested to see whether the end product will have the same result. So basis that, you kind of look at building a technology transfer agreement, where also there is some kind of they also build a kind of local business model, localize the particular technology, make it bankable, and then look at investing in a project here.
Oh, very interesting. So the very interesting angle what we are seeing here, that if we are in over financial return, if we are laying the technology framework, the social good framework. So what we're seeing, the investors' thoughts have come to a point where they also want to see if localizations are happening. So that is going to be a very new indicator that we are seeing with impact investment coming. That's a very interesting angle. So with that, I would like to ask Atika that you have been working with a different with an alliance of investors, and also before that you have run angel networks with an impact focus. You have experience with VCs who has an impact focus. So with these things changing, so what are you seeing, or what your experience is, or what are the important impact indicators that investors are picking or startups are coming up with? How are these two coming together, the investors and the startups, with these type of indicators? How are they together? How are they bridging? Or what is your experience around this?
Thank you, Arad. And I think echoing what Dr. Lam and also like Lina also shared, at the end, investor is still looking at financial return, hence the bankability, that's for sure. So I would say, even though there are emerging themes around interest in climate, for example, in Indonesia, like climate investment, both in the early stage and also like more mature projects, are really like the driver of this private capital growth, despite the declining investment amount. But still, financial return is the core indicator they want to see. But then we talk about impact indicator. I think at the end, how this, for example, like in the climate impact, how the data is not only like showing the data, but being responsible or like accountable for the data that is shared. I think the discussion is now about accountability and governance, how the data you share to the investors from the entrepreneur side, or like the metrics that you put on your theory of change are the real data. I think that is now the key changes. It's not only about like the what, but then how would you do about it in the future. So on that, the reason why it's now also like getting more important, because there's a lot of like when you talk about certain impact themes, the number is shown just to attract capital in a way, but actually at the end it should be aligned with the real business that's happening on the ground, with the people that you really affected, or like the people that is really being impacted during the value chain. So now investors are getting more like not really strict, but like scrutinizing, trying to understand better about this measurement or like the impact framework, so that the data is more accountable. And I think like that changes comes from two sides. First, on the supply side of the capital, which is like the source of funding itself, the one that we observe is that there's a lot of more impact first capital owners getting into the impact investment activities right now. So they are more familiar or like more experienced in the impact first, like philanthropy sector. So that's why they really understand what the impact framework should look like, right? Hence the framework getting more sophisticated. And the fund managers also need to understand how to implement that in their whole process, the due diligence, sourcing, and then later the portfolio management. On the other side, from the demand side of the capital itself, which is the entrepreneurs, we see more founders coming from the community that get the real impact of what's happening now, for example, like in the climate themes, for example. So we see more local founders that really see what happened on the ground. So they really want to solve that problem, right? So this force coming from two sides really like push the capital market and the investor in this case to really like being more literated in balancing and translating the impact indicators to the financial language.
Nice, nice. But that's a very nice thing you said. It is going to work that how the impact indicators are being translated into the financial language. That's a very interesting point raised. I'll come back to you on that. But with you, I have also mentioned a very interesting point. Like we know that impact investment till now, since 2010 to till now, almost $1.5 trillion has been invested as impact investment. So that much amount of money, it generally creates risk. It comes with risk. It has to manage different type of risks. And also you have what you have mentioned, that the accountability of the data, which is being demanded by the funders, they are requesting for more visibility on that, the authenticity of that. So there is a risk of impact washing as well from the entrepreneur side, and the investors are scared about that. So with that note, I would like to ask Rohma that with your experience of having a vast portfolio of impact entrepreneurs, and also what accelerating prosperity, sorry, I forgot your organization's name.
Accelerate prosperity.
Accelerate Prosperity. I'm so sorry. Accelerate Prosperity. That organization, as you also have go into blended funding models where you absorb this type of risk and give the entrepreneur of not only a financial input but also a chance so that they can go on with their impact. So there, I'd like to ask that like how is this types of investments and this type of blended finance opening up new ways to measure success, and how are you also absorbing this type of risks for the on the entrepreneurs side?
Yeah, thank you, Rad. I think very interesting question. And I think everything is going to be built off of what has already been discussed, because there are some great points done by the fellow panelists before. But I think one thing that I will definitely second is that there's a lot of new metrics coming out. And one of those, definitely, even the one that AP looks at, is looking at contextual innovation. So I think this is what Lena mentioned before. And when we define contextual innovation, we don't talk about, impact in a pure sense in that way, but we can also look at very traditional models that are being done in areas and locations where such a solution wasn't present before. And this is particularly true for a lot of your kind of rural areas and tier 2, tier 3 cities where your basic elements or innovations do not exist. And that's where we would come in, for example, to support something like that, right? So that's one, definitely, to answer your question, is that you're looking at a lot of new ways of looking at impact for investors as well as businesses, where they can pick up something as simple as having commuting buses, for example, in a location, but pitch it as investment because you're increasing mobility for women and children in those locations wouldn't be possible otherwise. So that's one example of one of our portfolio companies in a northern region of Pakistan, where such an entity did not exist before for school transportation and things like that. So for us, that's impact investing, right, at the end of the day. So different ways to look at it. I definitely think that it's more beneficial to the entrepreneur than a lot of times investors, because in a place like Pakistan, in a context like Pakistan and emerging locations, I think most of your localized capital comes from DFIs already, right? It is always somehow tied to development finance in many ways. So those metrics already are inbuilt and exist. And a lot of your economical value creation also falls into those metrics. So I'll talk more from an entrepreneur perspective, where I think it's very beneficial for them to start thinking about how the global context is looking at impact and new ways of investing, right? That includes perhaps calculating carbon credits, looking at ESMS and having a framework in place to actually be able to improve the ENS rating you have on a global benchmark to be able to access those kind of funds and mentorship. Another thing that was mentioned, I think, by Dr. Lam earlier is, for example, the new way of calculating and balancing your financial returns and social returns. So it's a concept called SROI, where you calculate your social return on investment and you compare it to your ROI. And you see what is the trade-off in terms of, are you looking for 10x ROI or are you looking for 10x SROI? And you're okay with maybe 1x ROI, for example. So you're willing to compromise on your growth of a business, not saying you compromise on financial stability, it should be sustainable, but you are primarily looking at the high growth of the kind of impact that can be created. For example, how many multipliers are you adding to the jobs you're creating for the next few years, and things like that. So I think these are all perspectives that I think are coming into place where a lot of your normal enterprises are looking at how to integrate some of these things just to be able to operate in a global economy. I'll stop there. I feel like we've already covered quite a lot, but I hope that answers your question.
Oh, yes, does. It surely does, and also it triggers more questions. And with your point, so what we are seeing that in the regular investments, we see that there is funders and there is entrepreneurs. So the money goes to the entrepreneur, and it is expected that it will come tenfold or 20-fold back to the funder. But now, through impact investment, there is a new angle. There is a trinity now that through which that the money and the data and accountability should flow, and that is people, the social angle, the good angle of it. So we see that there is a diversity here. So before it was just one and two ends. Now there is diversity that has opened up right here. So with these type of diversity, these type of risks, does technology or any intelligent business model has a role to play? That how do we balance this diversity? Does technology plays a role, or does new business models plays a role? So with that, I would request Dr. Lam to share his experience around it.
Well, I think basically in terms of minimizing the risk of the overall portfolio, obviously, diversification is a must. And this is out of the conventional wisdom. But now for impact in investing, obviously this is also important from a portfolio management perspective, whether we would like to balance the overall the impact risk or impact return out of the support for the elderly and also the young people, or even education, affordable housing, or the poverty alleviation. But I think this is the conventional wisdom, as I said earlier. But now I may not be able to give you the perfect answers about technology, but in terms of the blended financial mechanism, in terms of how we allocate risk and reward appetite according to the investors, not only the financial expectation, but also the social impact expectation. As long as we can clarify it properly, measure it accordingly, and if we can also provide the proper, reporting to the investors and how they can be satisfied with their overall return and risk, and even impact return and impact risk appetites. But on the other hand, in terms of technology, definitely if technology in the mainstream investing right now, a lot of people talk about how AI can reduce the production cost. Obviously, whether one like it or not, maybe the opportunity, job opportunity will be replaced by AI or some other robotic instrument. So from conventional perspective, this is obviously the importance of technology who can reduce cost. But at the same time, we might also look into the impact investing, how we can also make use of the technology to safeguard the impact deliverables. For instance, I'm also involved in people with disability, how we provide job and unleash their ability and productivity. So it's very clear that AI and assistive technology can support and even enhance their productivity in one way or the other. So therefore, I would like to say definitely technology can also help both conventional investment portfolio and also the impact portfolio to reduce risk. So I think in general, diversification and then also blended financial model and also technology can help to balance the overall risk of the impact portfolio. Thank you.
Very nice. Very nicely said, Dr. Lam. Then I would like to, from here, I would like to ask Lena, that the transfer of technology or innovation of technology, where do you think impact investment will be achieving better goals and better financial returns?
Yeah, so technology, the needs of South Asia and blended financing is like a beautiful holy triangle that we can talk about for a bit, because there are great technologies that are available, but what I saw that in South Asia, people were not even aware that these kind of things are there to address their specific needs. For example, in the last, I would say, 6 months, it's been almost a year, we have been working with a Belgian technology company that addresses two challenges. One is plastic waste management and sustainable construction. So, but when we met, and I mean, obviously being, an Asian here, I understand that plastic waste is a big issue in South Asia. And we are also looking as a region for sustainable low cost housing, for as a growth model rather than the traditional construction model. But when we met the entrepreneur in Belgium, even he did not have funding to expand in South Asia. He also doesn't have funding to expand in Belgium. As you know, raising funding is a tough opportunity. But and I'm going to talk about how blended financing, played a role in the growth of this particular entrepreneur with the technology, where we were able to jointly raise an EU grant, a small one, to enter South Asia. Their aim is to grow in the Asia Pacific region, but we at least said, let's test what we can do in India. We had to put in a proposal, we won the grant. It's a long process, and then finally with this grant you help this company come into India. But in India now we are helping them talk to, let's say, private sector companies who can actually invest in setting up the demonstration plant and help them also set up there. So you're connecting an entrepreneur from Europe with an entrepreneur in South Asia, number one, to set up now a private sector model. So you've used public sector money to bring in the company into India. Then you try to look at the private sector model. Now there is a willingness. The important thing is there is a willingness from private sector players in South Asia and in a European technology company to work together, which wasn't the case in the past. Also, because today, South Asian policy, especially the policy in India, is again, I'm coming back, to the holy grail that once you have a policy environment, then the technology can play a very good role to address the needs. So with these things, now the private sector partner has come forward to invest in setting up the first demonstration project that will convert plastic waste in India into sustainable prefab material which can be used for construction. So there's a combination of plastic waste processing and 3D printing to create these sustainable construction sheets. So this is highly innovative patented technology from Belgium, which actually could have died a death. Now, this is the role South Asia with its large markets can play. So we have actually growing capital availability in our country. We have also a big need to deal with our waste management issues. So if we could kind of blend all of these needs along with blended financing, so a bit of public sector financing to bring them, take some steps forward, and also some private sector money to come in. And while I was listening to Roma and what she's doing in Pakistan, I'm imagining a scenario where you can actually connect European startups with great technology with startups in Pakistan, or maybe in Bangladesh, where these startups are also looking for new business ideas to improve their bankability. So if we can actually connect these entrepreneurs from these regions, the European entrepreneurs looking for a market now, they can't expand into Pakistan, Bangladesh, or India on their own. These are very culturally different markets to deal with. So, and there's a willingness now from them to kind of come partner here. Now, if they have a local partner, which means for an impact investor, they are investing in a local entity, whether it's in Pakistan or Bangladesh, because they've created a joint venture with the latest technology. And this joint venture company, which is in South Asia, will license the technology to actually deploy the solutions out there. So to us, we have been thinking of these structures, and it's been very interesting to see that investors in India are very interested to say, oh, they are not paying huge, sums of money for tech transfer, but you're looking at very, very bankable models which will work for South Asia. Because I remember when I started doing this 15, 16 GBI, 16 years old, the European companies would come with, okay, pay me $1 million or $2 million and we will do this in India. And then obviously in India, where the technology is not tested, nobody was forthcoming. But the question is today, because South Asia poses, I mean, we are a very important, we are like a tiger economy, as a region collectively, where we can actually bring growth to countries that are not facing that kind of a growth. So this geopolitical scenario is also influencing investment in a big way, combined with the access to technology and strong policy environments. And I'm really heartened to see impact investors like you guys, like whether it is Roma's organization and Irad's organization. You all have an ecosystem which could be very comforting for an innovative technology company with good IP from Europe to come and deploy out there. So yeah, so this is where I see the trends moving, which I believe can create a great impact in South Asia, create business opportunities for our entrepreneurs, and new bankable models for our investors as well.
Very, very interesting, Uncle Lina, because the thing you said that yes, uh, the population here, the way this consumer market has changed, the consumer purchase powers, the tiger economy, but fragmented in Pakistan, India, Sri Lanka, Bangladesh, Nepal. So they have their different market trends, but together it has a very powerful consumer. And that very interesting is, I think, Atika, for you, that uh, mm, blending fragmentation together and making a hell economy out of it, that's, I think, what ASEAN stands for today. So your experience sitting at the heart of the ASEAN, Indonesia, Jakarta, and looking into different types of funds that you have managed and different types of funding that you have mobilized. So the impact investment thing for technology with technology, uh, when it is entering such a fragmented market, where there are impact, there are investment opportunities. So the fund manager needs to be very creative and innovative about it. You have already seen that in ASEAN. So what will be your advice on it, that when these type of funds enters South Asian markets, so the local fund managers, local platforms, how can they be innovative? What type of new innovative models they can use? What should be the mindset?
Yes, actually, the blended finance becoming the keyword in this impact investment is indeed like the trending topic that we kept hearing, right? And now we turn into like innovative finance. So just also like reflecting from my learning as well, and also like still learning in this innovative finance context. There's a community group of global innovative finance initiative, if I'm not mistaken. So it is also like discussed that what innovative means should always serve the local context. I think that really like relates as well with the point of contextual innovation. And it's not only about the technology innovation or like the solution of the innovative solution itself, but the innovation in the instruments. So learning from what we see in Indonesia, I think I shared a bit on Indonesia specifically first. In the past 10 years, the discussion about impact investment was still very highly associated with venture investment. I would say that's because the context of innovation and impact was still very close with the startup, like the high fast growth companies that also provide tech solutions. And then like impact is part of the sector they were working on. Yes, there were also like other impact investors coming into like a more conventional themes like in the agri sector, but at the end the way it works was still very close with how the venture investment worked. But then a lot of learning coming from there, not everything worked, and now we see a different type of fund managers coming into impact. And what is innovative in the approach is actually, first, we learned that venture investment doesn't work at least in the impact enterprises we see in Indonesia, because usually the expectation of the growth is longer, like it's a long-term horizon investment compared to the fast growth startup characteristics in this case. Second, the need is not only always about equity. At the end, it's sometimes also like more onto like loan and like a bit of in between. So an innovative instrument should be designed towards that. And the third point is also like about the sector itself. Like impact is so broad, right? We talk about even like climate tech. Are you talking about like waste management? Are you talking about the land use? Are you talking about forestry, innovation? They have different needs and different type of capital that fits them. So the innovation here is how to make sure your financial product can fit these different needs. There's no like one fits all. So one example, now we see more value chain finance coming in the impact investment context. It's not really like a novel approach, like it's there anyway, the supply chain finance, but the way it was innovative because they plug in impact in the terms and also like the payment cycle. So they now make sure the impact data, we talked about it earlier, right? How impact data translated into financial language. They now make sure that the impact achieved can be incentive for the borrowers, for example, so they can get a lower interest rate. And from the investor perspective, that's an innovative approach because there's a different way of doing the financial modeling. There's a different way of assessing the costs and so on, right? So maybe the term innovative doesn't always mean very new thing, but it's a slight different way of what has been done initially. Another approach of innovative finance that we see is like this. It's not really like fancy innovation on providing working capital for agri-tech company, but the way it was used is for that's climate smart practice that is not supported by the typical VC. So this is really like this is part of the blended where some part of the capital will be used for the impact achievement, and some others are used for the commercial growth, and that is blended together in one effort. So I think to close that, then the action item for the fund managers is like to acknowledge that maybe some impact investment opportunities require a different way of approach. It's not just asking the investment readiness for the pipeline so they can fit your thesis, but also for the fund managers to design the new or like as an innovative approach so they can fit the entrepreneur's need. I think that's my point here.
Thank you. Thank you so much. Thank you so much. We are almost at the end of our discussion. And with that, I would like to pick a very interesting question from the audience, which we have already in our live chat. It is from Zubair. It is to Miss Labib. It is to Rahma. And I think that's a very good question for Rahma to answer. I'm reading it out for you, Rahma. To Ms. Labib, impact investment is said to be influencing development finance. Which factors do you think impact investment is influencing itself? Is it a shift in thinking of the investor, capital, or context? A very tricky question.
Great, thank you, Rod. Yeah, I think it's very much in line with the panel discussion we're having, but there's so much to unpack about what the panelists also said before this. So I do want to get into that if I get the opportunity. I'll definitely answer this first, and then maybe I could do some points to Atika's points and Lina's points because they're very interesting, and I'm foreseeing side discussions after this panel with them as well because everything kind of comes into place a lot, and AP is pioneering and kind of trying out a lot of these models already in a lot of places that we work in. So there's definitely a lot of learning. So just, I think in terms of the question that's been asked, I definitely think that for context of Pakistan, at least, it's definitely the capital, number one, and then context. So capital, I say this because from a long time, I feel like, areas like Pakistan and kind of emerging economies have been very, very dependent on donors and external and international capital coming in, whether it be VCs, and that's where I kind of agree with Atika's point in one way or the other that a lot of the existing venture capitals that are locally available over here, they all do back end. They all had a impact related funding that was coming into them, right? So that's what I had mentioned earlier as well. So I definitely think the capital is driving this kind of change and asking people and moving them towards conscious investing and asking these businesses to start developing those frameworks as well, like we mentioned earlier. But context, why I would say is because, when we work in places like Pakistan, and I've seen this in other places as well, we're opening up in Syria, we've seen this in Afghanistan as well. A lot of times the small and growing businesses that we talk about, they are only able to sustain when they have efficiency in terms of, for example, energy costs, efficiency in terms of employing technology, or having some kind of aspect that automatically actually creates impact, but also saves them on costs, creates more efficiency within them, allows them to think for a larger market, for example. So context, I think, in these locations automatically pushes you, for example, being more climate resilient, opening up a location, that can support a local community as well. So I think it allows, it kind of forces a lot of these businesses to move towards that automatically just because of the place that they're based in. So I think both of those definitely play a part, but globally, I definitely think it's capital leading that. But if you just allow me to kind of go back to some of these points, I think something that Atika has mentioned, and one of the examples she's given in terms of what blended finance could look like. So although AP in different areas, because of regulation and different ways that we're registered, operates and does investment differently in each of the countries we work in. In Pakistan, we do concessional financing and concessional loans, which is exactly what Atika was talking about. And we've actually tried that, and it's worked really, really well. Because like you said, a lot of the lines between impact investment normal investment, donor and grants is very blurred in Pakistan, unfortunately. And you see the same kind of businesses kind of like ping-ponging to all these locations. And I think what we've done is we've tied that incentive into what you're able to get in terms of your market subsidy, in terms of your the type of collateral you need to put up, the grace periods you're able to get, and kind of integrated into kind of funding availability that we have. So that's what we're offering to businesses, and it's turned out really well. We are able to, also do the second model you were talking about within this, where we tie tranches to different impact milestones that we set for them. Yes, we have a very, very strict financial model, financial return ability. Because of the kind of debt we're giving, we have to ensure that this business is able to pay us back. But at the same time, we have a structure in place which assesses the impact and also assures we're getting that kind of impact over the next 5 or 7 years, whatever the tenure is. So these are interesting models. I think one thing Lena was also talking about around the exchange, we're seeing a lot of the world moving towards this kind of trade mindset of what we can get out of these other countries when we do these kind of investments, rather than just giving charity, right? Which is fair. I think that is the right mindset or the right transition to go towards, but that does bring along kind of needed innovations in the models that we work with, where we need to start thinking about how can this business be a more global business rather than just a local business. At times it's possible, at times it's not. But I think these are very interesting concepts. AP has tried out a lot of these things locally, so would be happy to share some of the learnings in the EV space, for example, in the fintech space, where we're talking about, fintech provision to agri markets and farmers on the ground as well. So a lot of these business models, the 500 businesses are across Central and South Asia, but in Pakistan we have 150 businesses, and they're across all of these sectors. So we've tried out a lot of these models and seen what works and what doesn't. I think that's where the risk taking comes in as well. AP does take a lot of that early stage risk, and we of course have failed models in that way as well. But it also allows us to explore those successful ones. So happy to share those at some other time. But I think maybe we're running out of time, so I'm going to stop there.
No, that was very nicely put. Very nicely put. A very interesting discussion we have all shared together. I was just taking notes while I was hearing all of you. That we started with like financial and social return, how they're going to blend together, and what thoughts which are taking towards it. Yes, we are looking for financial returns, but at the same time, we're also looking at a new block which we're calling the social good, which includes technology with an IP, which says that we need localization of technology and transfer of technology. We need to be conscious about climate. We are looking into innovative financing models like concessional financing, value chain financing. I think these are the measurable goods which we are actually looking into as social goods on top of the financial return. If I because the four of you here today, I'm just summing up all your brains and experience, and it seems that we always think about that. We know what is the financial return, so what is the social good? So I think from what I heard from you all today, I think it is that packet in is as a technology with an IP, localization, climate, innovative financial models like concessional financing, value chain financing, and the risk that we all think that we possess is the impact washing, which we can easily eliminate it, which comes with the capital. If the capital is ensured by impact frameworks and accountable data, that capital actually can serve the content that we are looking out for investment. So thank you so much. It was lovely talking and connecting with you all. I hope we can sit together on a cafe someday. Let's look forward to that. And with that, with a very good note, I hand it over to you, Sucharita. It was lovely talking to all of you people, all of you. Thank you so much.
Thanks, Arad. We have a couple of minutes. There are two questions. We probably can take one. I just want to let Samia know. Samia, we will get Dr. Lam to respond to that separately offline. But there is one last question that maybe one of you who's interested can take, which is, how should founders adjust their business models to meet both investor expectations and impact outcomes without diluting mission. And sorry, Irad, please excuse me. I'm asking that especially on that last point of impact washing. I think it'd be nice maybe if any of the panelists want to respond to that question.
I can go first, Suchi, and then maybe the rest can take over. And, I really feel that, given also this interesting conversation, that now it's a really good time to, think about co-creating a platform that channels investment into innovative technologies, addressing South Asia's sustainability and, innovation challenges, particularly when these solutions are not available. I think creating a kind of co-creating together a platform would be very, very interesting. And also to strengthen the ecosystem by building investor capacity. And I think this is also something we talk less about. And, sharing these kind of opportunities as well. And I think these are things that we really like to I think, which is a big possibility now, given the kind of thoughts we've been hearing, across the board from this conversation.
Thanks, Lena. Roma, Attica?
Yeah, I can add next, I think. To be honest, as someone who's looked at many pitches to do impact investing in, I do think that yes, although it's important to have some kind of ethics and impact integrated into your core values to be successful as an impact entrepreneur, I think financial stability, some sort of financial return should be prioritized. And why I say this is not because I'm a hardcore VC investor in any way, but I think it just amplifies the kind of impact potential you have. And that's what most impact investors will see, is that if you are unable to sustain your own operations and you will need continuous capital injection, for example, to scale, or you're unable to take that impact to the next level yourself with your financials, it's a very weak model for them impact-wise as well, right? So to strengthen one, you need to ensure that you have other first. And I think unit economics making sense, financial viability, and just, bonus points if you're able to have a great margin, which allows you to reinvest into your business and grow on your own. I think for me as an investor, that's the balance I would want, is that you have the core elements required for financial stability, and then you look at growing your impact. I hope that helps.
All right, thanks very much. We are at time. Thank you once again to everybody who's joined us, not just the panelists, but our participants as well. We hope that we see you again at the next edition of the South Asia Convening. Until then, I'll say goodbye and let's power on together.
Thank you.
Thanks, everyone. Thank you.
Thank you.
Bye-bye.
Thank you.
Bye.
Bye.
Bye.